Hello there and welcome back to the channel. Are you looking to make smarter investment decisions as South Africa's economic environment changes? With inflation slowing down, there are bound to be a lot of investment opportunities that will manifest themselves in the market, especially where South Africa is concerned. This could be a perfect moment to really reconsider your investment strategy and dive into the market with fresh insights, especially after what we are going to talk about today. We have seen in recent times South Africa's inflation rate dropping to 4.9 in July from a high of 5.4 in June. This change opens the door for a potential interest rate cut by the South African Reserve Bank, especially knowing that South Africa uses a monetary policy instrument which is called inflation targeting. In this, what it basically means is that they use interest rates to try and control the level of inflation within 3 to 6%. Now that we've seen a decrease in that inflation rate, it means that there is a probability that interest rates might go down by probably somewhere around 25 basis points. And this is what the market is anticipating. And therefore, this is something that you need to be factoring in to your investment strategy. Another thing that might also happen is that with inflation going down, we're bound also to see an increase in consumer spending. And therefore, when that happens, different sectors are going to be affected by this increase in spending. And therefore, you need to position your money to get the right kind of benefits, especially now in this particular period. This is Friday Money Matters. I'm your host, Kenneth. Thank you for tuning in. Please consider supporting the channel with your subscription. We'll greatly appreciate your efforts. Thank you to all our returning viewers and subscribers. Continue liking the videos, share. We really appreciate what you guys are doing to support the growth of this channel. Let's dive in. Now, one of the things that you need to consider in such an economic environment are bonds. Consider buying government bonds. Remember, we spoke about this in one of these videos. I will link the video down below. We say that as far as investment tools are concerned, bonds are one of those tools where you've got a fixed time period and also there is a fixed rate of return. Now, the advantage to that is that bonds usually have got a very low risk, and because the risk is low, the time frame for maturity of the bond is also fixed. You know when you'll get your return on your investment, and you know exactly the amount of interest that you'll get from those particular bonds. So it is easy then to plan for such an investment. Another thing to really think about as far as bonds are concerned is that a lower interest rates always lead to higher bond prices. Therefore, if bond prices are quite high, it also means that the return on those will be quite something that you put a big smile on your investment first. So please do consider investing in bonds. The second thing to consider is investing in equities. Now, you cannot just go and invest in every sector. Look at those sectors that are impacted a lot by either inflation or interest rate. One of those sectors will be the retail sector, especially with inflation coming down. We are bound to see an increase in consumer spending. And as consumer spending increases, it means that the returns or the yields of companies that are in the retail sector will increase. So if you're buying those equities now will be a good time to probably invest in there, because as we go towards the festive season, we have seen in South Africa a higher consumer spending, especially for brands such as Woolies, Shoprite, Pick n Pay. They're bound to make a killing out of such a market. Again, one thing to also consider is that the cost of borrowing is going down. Therefore, spending will increase in sectors such as real estate. As real estate increases, so we are going towards what is called a buyer market, right? So there will be increase in demand for properties and stuff like that, because also, again, as I mentioned, the cost of borrowing has decreased. Now, what this does also is that it has an impact on all those equities that are in the real estate sector. So make sure to maximize on such opportunities, as you are bound to see that increase in spending in the retail sector because of the expected decrease in interest rates. The third thing to consider is dividend paying stocks. Now, a dividend paying stock is a stock that pays a dividend after certain or prescribed given time periods. Often companies, from their earnings, they will pay their shareholders a particular dividend depending on how the company is performing. So this could be a very good idea also to earn quite a sizable amount of a change, especially in a season or in a time period where interest rates are low. Then you are getting another way of getting income coming in, especially in such a period. The fourth thing to consider is stay informed. Now, by that I mean that you need to watch the rand. I'm sure you have seen before, we even spoke about it here in one of the videos when we're talking about a CPI in the US. Now, the same phenomenon also will apply to the South African market. Now, as inflation has gone down, there is going to be a change in interest rates, like we said. Now, this is bound to have a big impact on the rand as the rand trades with other currencies. All right. So the pricing of the rand is bound to change relative to other currencies. So this might affect companies that are in the import and export industry. So every export-based company is bound to feel the brunt of this, or risk or opportunities may arise from such a scenario. So you need to really stay informed, find out exactly how the rand will perform. Is there going to be an increase in the value of the rand relative to currencies such as the US and other bigger currencies, the euro, the pound, and so forth? Or is the rand going to take a knock? Therefore, you need to pay attention to what is happening in the market, and this will give you the right kind of insight to make the decisions when you really need to make that move in the market. Whichever way things go, one thing to remember is that what is happening now will create two things: either the opportunity that will arise as investment ideas, opportunities open up, or the risk also that will arise because the market will change, right? Change depending on what is happening. Change as a result to inflation. Change as a result to changes in interest rates. So you really need to make a balance, see exactly how you position the opportunity and attack it versus the risk that may arise as a result. It also needs mentioning right here that if ever you are bound to make a decision and you're not sure, make sure that you see or speak to a certified financial broker or financial advisor. It could be your bank, or it could be anyone else that is certified as a financial investment coach or someone who is in investment. Please let us know what kind of investment strategies are you thinking of applying in such a market, or what investment do you think will work? Leave a comment down below. Don't forget to like, share, and subscribe if you have not yet subscribed. This is a Friday Money Matters. We'll see you in the next video. Thank you for watching. Bye.